Welcome back to today's Personal Finance Show here on Dublin City FM. If you have just joined us, today's Personal Finance Show is focusing purely on the property market and in particular to the various government schemes. So if you've been with us from the top of the show, I'm delighted to say again that I'm actually joined in studio with Michael Broderick, who is the CEO of the First Home Scheme. Michael, you're very welcome to the studio. Thanks a million for coming in to see us.
Thanks very much, Paul. Delighted to be with you today.
Michael, let's just make this simple for listeners. What is the First Home Scheme? Why was it set up? And what do you guys hope to achieve? Let's just start there if that's okay.
No, all very good questions. So I suppose we constantly hear about those people who are renting and have been in the rental market for a number of years, or saving with the objective of purchasing a home of their own. And you know, it's very hard to save, and they've been saving for many years and they're just not making any major headway in relation to that. So what the First Home Scheme was designed to do was to help people like that by bridging a gap. So take a very simple example. Say somebody wants to purchase a property for €300,000. I know the figures are not realistic, but just for example, let's say they have a mortgage for 200,000. They must have a 10% deposit, so that's 30 of the 300. So they now have 230,000 available to them. But you can immediately see what the issue is. They're looking to purchase a property for 300,000, so they have a gap of 70,000. Now, if you're going to be saving and paying rent, it's going to take you an awful long time to save 70,000. And that's where the First Home Scheme can come in. We can come in, we can plug that gap, give that individual or couple the 70,000, and then we take an equity share in their property, which they can repay at any point in time in the future.
And they don't have to repay it. That's correct, isn't it? So there's a management charge we go through in a couple of seconds, but they don't have to repay it until they either sell the property or if they pass away.
Yeah, that's exactly right. And you know, a lot of people, particularly when we started off, were saying, oh, this is a second mortgage. But there are a lot of reasons, and I hope to explain them to you today as to why, in our view, it's not a second mortgage. So that you've hit on the first one there for straight off. So the reality of it is you could spend your entire life in your property and not make a repayment of any sort or type, or indeed cover any of the service charges. But however, when you do pass away, your estate then would fall liable for those. So they do have to be, it does have to be
paid at some stage
at a point in time.
That's right. But if you sell the property or pass away,
correct.
Yes,
but there's complete flexibility around when you actually repay the equity amount. And also then, as I just touched on, there are service charges. So there is a concept of service charge, and that's, you know, some people say that's like paying interest, and you know, I suppose you can call it whatever you want. But firstly, that only starts to apply from the beginning of year 6. So for the first 5 years, there is no service charge, there's no repayments of any type to be made. At the beginning of year 6, we will make contact with the customer at that point and say, look, you're coming up to your 6th anniversary, a service charge is going to start, it will become applicable, and it's 1.75% of the amount you drew down from us. But what we will also ask you at that time is, do you want to roll that up, or would you like to pay it now on a month-by-month basis? So if somebody says, say for example, they might have kids
in creches, or they could, loads going on.
And it may not be a good time for somebody to start paying a few quid on a monthly basis. So what they can say to us is, no, do you know what, it doesn't suit us to do it now, we'd like to roll that up. And we say, fine. And the good thing about it is, and this is where it differs very much from a mortgage, you can roll that up at no additional cost. It's rolled up on the basis of simple interest, so there's no charge, it's not compounding, there's no additional cost. Now it does have to be repaid in the same way as the equity does at some point in time, but you can roll it up when it falls due, and you do not have to worry about finding that extra money every month to make the repayments.
Yeah, I think we've dived into probably the biggest criticism the scheme's got in the beginning. I actually remember being on various other radio stations and TV talking about the scheme when it launched, and I don't think it's a second mortgage. I think it was, you know, a lot of misinformation out there, and the reason we're doing this show today and concentrating on the government schemes is, and I'm not trying to be pro any political party when I say this, but we're not going to fix the housing scheme, the housing issue. We're not going to be able to go back over the last 10 years or even 15 years and sort of the financial crash or the supply. And everyone kind of has to look after their own house and be able to see what is available to help them get onto the property ladder to buy a property. And these schemes do it. When you have so much negativity, especially when people think they've got 2 mortgages now and they're limited what they can do, you know, it can sometimes frighten people away from even investigating what they could do. I think that's such a shame, because when we have people coming from mortgage consultations, even ask Paul, we find that sometimes looking and going, you could have done this last year. Did you not know about whether it's the Help the Boy or is the First Home Scheme? And why didn't you do this? Oh, I didn't know I could do 2 of them together. I didn't know. Yeah. You know, my dad always said, no, don't do that because, you know, the government own your house and you can't paint. There's some ridiculous stories out there which we'll go through later on. But, you know, I think this is great. We're breaking it down and letting people know what's available. And I've no doubt will definitely help listeners and what they're doing. Okay, so that's the management piece. Let's talk about the numbers, if you don't mind, quickly before we move on. What are the numbers that you guys have achieved to date in relation to, can you give us the approval rates? That's public knowledge or public information.
It is, yeah.
So what's the approval rates like?
Yeah, we release numbers every quarter. So in the last quarterly update we did, which was at the end of June, we have over 5,000 people approved for the scheme, and we have over 2,000 facilities issued. So that means there's over 2,000 homes bought and people living in them through the use of the scheme.
Well, that's amazing. In fairness, that is quite good. And then out of 5,000, the elephant in the room every time we talk about housing is the supply. I presume the 5,000, you want the supply to increase as much as anybody else, because the more supply, the more loans you can get out there and help people.
Absolutely. And in fact, that's one of the objectives of the scheme. So the scheme has two objectives. First and foremost, to assist people get on the property ladder and allow them to go off and buy their home. But the second objective of the scheme is to stimulate and encourage supply. So we're actually actively engaged with builders and developers around the country, basically saying to them, guys, if you build the right property for first-time buyers, they will be able to buy that property because they can use the First Home scheme to supplement their mortgage and their deposit by bridging that gap and buying the property that you build. But it has to be the right property, and it has to be within price ceilings. Now, I know I've just mentioned the price ceilings there, so we might as well get that elephant
Let's
out.
get into that. But again, we will say the elephant in the room, but again, I think we'll go into questions. Now you said just stay around for a few questions, which I do appreciate later on. But I know one of them's going to come in and someone's going to be, saying, I can't buy an apartment for more than $475. The scheme has to make sure that it doesn't increase prices. So you have to be very sensitive, obviously, what you do here.
Absolutely. And again, this is something that we've been very conscious of from day one, because again, this was one of the accusations against the scheme on day one, and you'll still see commentary around it that, the scheme is contributing to house price inflation. So we're very cognizant of that, because that's the last thing we want to do. We're here to help consumers, not actually put prices up or drive prices up, thereby causing problems for consumers. So the price cap achieves that, obviously. If you put a price cap in, it means that if you increase the price cap, it will probably drive. To be fair, you could understand how that would work. Absolutely. And what we do is we review the price ceilings twice a year, every 6 months. We release the outcome of that on the 1st of July and the 1st of January every year, and there are changes. To date, we've reviewed them 3 times. There has been some changes each time, but we look at each local authority area in detail, and we engage with the industry. We look at what the house prices are in that area. We look at CSO data around the median price of first-time buyer product, and we compile all of that information. We also use KPMG to assist us in that regard, and that's how we decide whether a price ceiling needs to be put up or lowered. It can also be lowered. People are of the view that they can only go up. To date, I suppose they haven't only gone up because house price inflation is heading that way, but they can also be reduced. And what we try to do is to get a happy medium. And you could argue that we never actually achieve that or never will, but in as close as possible, what we try to do is get a happy medium between having the house price ceiling sufficiently high that people can actually use the scheme, because there's no point having the scheme if people can't use it. But then equally that we're not encouraging house price inflation. So it's that happy medium that we're always striving to reach. And as I said, you could argue that we'll never get there, but we are very cognizant. And we believe to date, and in fact we're so cognizant of the house price inflation aspect. Our accusations is that we got a report done by KPMG a few months back where we actually asked them to go out and examine had the scheme contributed to house price inflation, and the conclusion they reached was it hadn't, and it's based on this. The counties that had the greatest house price inflation were the counties where we had done the least amount of business. So the point there is house price inflation is happening anyway, irrespective of the scheme. All the scheme is doing is enabling people to actually purchase properties.
I remember when you guys launched this, I think it was in the RDS. I remember the press launch when it launched, and I remember a couple of questions coming in from journalists, etc. But this is done quite well in the UK as well, and it didn't really increase the house price in the UK in the research, if memory serves me correctly, did it?
Yeah, initially it did, and because they didn't have the house price ceiling concept in place.
So then they brought it in.
They brought that
exactly,
and then it kept it down.
So you had a good blueprint, if you like,
correct,
by looking at your
and
other
jurisdictions, from their
mistakes.
and
learn from their mistakes. Okay, very good. So in relation to the cap then, and I know this is obviously Dublin City FM, but the scheme isn't really there. I live in South County Dublin, and I often hear people saying you can't buy anything in South County Dublin, but the scheme is a nationwide scheme. It's to look after 26 counties.
Exactly.
It's not there to put people in houses in South County Dublin, to be fair. But if somebody wanted to get an apartment that was in the threshold of 475, they could use the scheme.
And the important thing is, so to your point there, Paul, the 4 local authority areas in Dublin, house price ceiling is 475, but the ceiling for apartments is 500.
Right.
And people often say, well, why is it more for an apartment than a house? Because, conceptually you'd think, well, a house costs more. But actually it costs more to deliver an apartment, because if you think about it, you have lift shafts, you have cores, you have
service areas.
You can't sell the first one until the last one is completed. So it actually does cost more to deliver an apartment. So that's why there's a higher ceiling of 500,000. And the fact that, I suppose, the proof is in the pudding in this context, that we do an awful lot of business. In fact, our second highest county, our local authority area that we provide facilities in is Fingal.
Okay.
We also do a lot of business in South Dublin, and we actually do a business in relation to apartments in Dún Laoghaire, Rathdown. So we actually, Dublin City Centre is probably the area that we do least, because there's very little new supply of anything in Dublin City Centre, as most people are aware. But we certainly do provide facilities in all of the local authorities in the Dublin area, even though prices are that bit more challenging in Dublin.
Okay, so the numbers are fairness are going the right way, in that we've got nearly 2,000 people through and a 5,000 approved. Hope even the supply increases, we'll see more come through. What are the frequently asked questions? I know we'll talk about the website in a second and point people over to the website and where to get in contact with any more questions, or to look to get approval, etc., and bring through the process. But before we get there, what are the frequently asked questions you're getting from people? Because being Irish, we typically think the same way, and you're going to get the same questions time and time again. Is there any myths even you want to bust while we're on today? Because again, I've heard a load of things myth-wise that are just nonsense.
Yeah.
So you've obviously got way more than I have.
No, well, there's 3 main ones, and to be fair, we've dealt with the first one, which is that it's a second mortgage. So I think, and hopefully we'll explain to people why it's not. And I suppose just to add to that as well, I mean, the other aspect of the reason it's not a second mortgage is there is complete flexibility in terms of when you repay. So unlike a mortgage where you've defined payments, there's a lot of flexibility here, which you don't have with a mortgage. The second one, and this might seem like an unusual one, we often get asked is, will the government own part of my house? And the reality and the answer to that question is no, they will not. And just to give a little bit maybe a background to our scheme, a scheme has 4 shareholders. It has the government, the state, it has AIB, which also includes Haven and EBS. It has Permanent TSB, and it has Bank of Ireland. So they're the 4 shareholders, and they put the money into the scheme. And to date, they've put 480 million into the scheme. So the scheme itself, which is a private company, it's not a state agency or it's not anything like that. And so we will take an equity share in your property in the form of what's called an inhibition. So it's in the same way that the bank who give you your mortgage will take a charge over your property.
So it's like a charge, but it's not
like
you
a charge.
Don't own it.
They don't, no, absolutely. And it's second in line, actually. So the bank
bank have first call,
absolutely.
You've second call.
Yeah.
Okay.
And so, I've been asked the defence, will the people care, or will the government care what colour I paint my walls? Absolutely not. I can assure you we have far better things to be doing than going around asking people what colour they're painting their walls.
But again, it's not the government. It's a
not
separate private company. Yeah, so that's a really important point actually.
Yeah, it's the first home scheme who actually will have the equity share in your property, not the government. Now, the government are owners of the scheme,
of course,
but they're one of 4.
It's not the government.
Yeah, it's not the government. So the government, they don't even know who's availing of the scheme because all that information is confidential. It is not in any way, Big Brother looking to check to see what you're doing with your house. There's none of that. I can absolutely assure people there's none of that that takes place. Then the third one, I suppose, is that I can't use Help to Buy with the first home scheme. So the good news there is you absolutely can.
Yeah.
So the Help to Buy, as you know, is a great scheme, and it often allows people to put their deposit together. And in fact, the Help to Buy and the first home scheme really work really well as a dual scheme, because you have to have a 10% deposit to use our scheme, and by using the Help to Buy, it allows you to put that 10% deposit together.
Okay, so I just want to when we're talking about that there, and we're talking, the Help to Buy in particular, can we you gave listeners a good example there, on a 300,000 property. Can I just run an example through you just to get the kind of, that's the way it works? Because again, even in my own head, we do this, we ask Paul, when people give a mortgage consultation, we try use the Help to Buy, use the first home scheme, or else go to the local authority to what's called the rebuilding or home loan if you need to, or what was called that. Let's say you have somebody, they have approval and they get, they're getting approval on the Help to Buy. I'd always recommend somebody get a consultation as soon as possible. You're going to buy anyway. But the first thing to do is get the Help to Buy in case you buy a new build. Right, that's up to €30,000.
Correct.
So if you have paid enough income tax over the last 4 years for either yourself single or yourself and your partner, yourself and your spouse, you're going to have €30,000. If you're technically renting today and you want to buy something for €400,000, and you haven't got a deposit, or remember 350,000, 400,000, you could nearly pull it off, because if you get the help to buy and you got a mortgage application together for 300,000, 320, 350k, which the majority of people that are paying kind of rent at €2,000 would probably have the gross income to pull that off. They can get approval from the bank for 300,000, 320 maybe, use a 30 grand help to buy, they're at 350, and now they can stretch themselves up to 400,000 under the scheme. Exactly. And you give them the change, or 420, whatever that kind of percentage max is. And that's what I think is the great thing here, because I said before, like, so many times you see people sit in front of us for a consultation and they're kind of like bunnies in the headlight, and they don't understand how these different schemes work, and they could have done it months ago or years ago, and they're 2 years ago, maybe, or 18 months ago, and they just don't understand. I think that's such a shame for them.
That's a really good point, Paul, because we see this all the time also. You know, people come to us and they'll present you kind of their own personal circumstances, and you're like, yeah, you qualify, and they're like, oh, I do?
Yeah.
And it's like,
too good to be true, almost.
And then they suddenly realise that maybe they could have qualified 2 years ago.
Yeah.
So to your point, you don't need, there are a lot of really good government schemes out there now, for people in varying situations and circumstances. And as you said at the outset, look, none of these schemes are going to solve the housing crisis by themselves, and we're not going to solve the housing crisis by ourselves. But we address a cohort of people who want to purchase a property, and we help those people out. And to your point, you know, if you use the Help to Buy, you use our scheme, you don't need to have a huge deposit to be able to get on the property ladder, and you'd be surprised with how little actually you do need. So people are out there busting a gut, trying to save day in, day out, you know, reneging and going on holidays and being careful what they spend. And we're not saying you shouldn't. We've all been there.
We've all been there.
We've all been there.
Yeah, exactly.
But the point is, you would be surprised. So go talk to somebody such as yourself, or go onto our scheme or our website, where you can actually, there's a calculator. So you'd be very surprised at what you can do once, and having a track record, I suppose, is the key thing, because when you go to your bank looking for a mortgage,
you need the track record. And that's the good thing, just to say here as well, the reason I was using an example was, if you are renting paying €2,000, that will more than likely give you what's called the affordability check. The banks really only care about the affordability check. If you're getting your full deposit from the Help to Buy, you only need to have 6 months affordability. So if being rented for more than 6 months, you will probably pass, providing you're not doing any massive gambling, or you've had any kind of ICB or credit issues in the past. And there's a lot of people sitting in houses where they could probably be renting, where they could be buying. Can we just talk about one other unique part of the scheme that I had completely forgotten about until I was doing the research for today's piece? And that is, if somebody is in a house, so obviously typically this is for first-time buyers only looking at a new build or a self-build, but there is cases where they can buy a second-hand property if you've been received a tenancy termination. So if you're somebody living in a second-hand property and you have a landlord, and the landlord gives you a notice to terminate the tenants, you can actually apply for the scheme.
Absolutely, yeah.
I completely forgot about that, to be honest with you.
And to be fair, it is, I suppose, the smaller side of our business, but it is a product that we brought in last April. Around the time there was a lot of discussion, as you will recall, around, you know,
people exiting the market, landlords, etc.
And when they lifted the ban on evicting tenants.
And the ECP showed up as well, which forced a lot of accident, and landlords may be out for tracker mortgages. Yeah.
So there is a scheme there now as part of the First Home scheme, whereby if you, as you said, if you're a tenant in a property and your landlord has issued you with a notice of termination, and it must be the formal, there is a formal RTB one, notice of termination, you can come to us. The landlord has issued that because they're going to sell the property on the open market, but you can come to us, we can provide you with funding in the same way as if you were buying a new property, to allow you to go off and bid on that property, or actually try and secure that property by purchasing it from the landlord.
I presume those properties fall under the same valuations, the same caps.
Yeah, exactly.
So it's the 475 in Dublin,
correct,
or it was a
500 for an apartment.
Okay. And then all the other different descriptions.
Exactly.
You mentioned the website, actually, we haven't called it out yet, because just give everyone the website.
Yeah, it's firsthomscheme.ie. So very simple.
Very
it's
good.
firsthomscheme.ie, and all the information on the scheme itself is available there.
Nothing really more to say in that one. It is that straightforward enough. Okay, so we've gone through the kind of some of the myths, and we're talking about the kind of frequently asked questions. What else do you see from people coming towards you, Michael, asking questions? So we're talking about the government don't own the property. They're not going to care if you paint the house. Is there anything else that you think trip people up in their consideration for the scheme?
Yeah, I suppose the obvious question is perhaps, is there any circumstance or are there any occasions where I have to repay the equity that I drew down on day one? So there are 4 scenarios where it's a mandatory requirement that you repay. So the first one of those is if you sell the property.
Right.
So no more than if you have a mortgage and you sell the property, you have to repay. Pay it back. So you have to pay back the first home scheme, whatever is outstanding at that point in time, in relation to the...
And that could be the capital as well, you're saying,
as
well as
if
you did roll up the service charge.
It's the whole lot, everything, yeah. So that's the first occasion. The second one is if it's no longer your principal private residence. So if you're fortunate enough to be able to go off and buy a second property and you want to turn this now into a rental, you can do that, but you must repay the first home scheme. So because it's not intended to operate
that's fair enough
for rentals. The third scenario is that if you are refinancing with a bank that's not a member of the scheme, so bearing in mind what I said previously, the banks that are in the scheme are AAB, Bank of Ireland, EBS.
So if you move from Bank of Ireland to Advent,
so if you move to a bank,
guys.
Exactly. And the reason for that is simple, because those are the 5 banks have put the money into the scheme. They're funding the scheme, so
that's
the money
only
you
fair,
draw down on day one.
And as well as that, if you are doing the extra release or switching, you might be able to do the extra release to wipe you guys out anyway, and just have that one piece, and you're paying the capital interest. So you could use you guys to get yourself up on the ladder.
We'll happily take the money back.
But an example that if somebody gets it now and they need it in 4 or 5 years, they're earning more income, their career is progressing, the way to get, probably not being rude, rid of you guys is probably to do the switch, get the money, give you back, and then have your normal capital interest in your full property.
Absolutely.
And that's okay.
And to be fair,
and that's really good and flexible.
And that's the way that
it's intended nearly,
Yeah, absolutely. That's the way the scheme, while you can effectively stay in your property for 30 years and not repay us, that's really not what we want.
No, exactly,
Ideally, we'd like for people to stay whatever 5 to 10 years and pay back sometime within that period. But look, there's no penalty if you can't or don't.
I think I remember explaining this before in an interview, that this is really like the bank of mum and dad for people that don't have the bank of mum and dad, isn't it? Let's call it a spade. In kind of layman terms, this is what it is.
We mightn't be quite as forgiving as mum and dad, but you do have to be paid. But no, in essence,
a few more legal agreements than the bank of mum and dad.
But you're absolutely right. That's exactly that's a good analogy. Actually, that's exactly what it is. And the last is the fourth one. Scenario then where you have to repay is when you pass away. So this goes back to the point that you could spend your entire life in the home, and roll up all your service charges, not pay any of the equity or capital back, but when you pass away, your estate then fall liable for it. So that's
but you don't need to worry about that because you'll be dead if that does happen. So
exactly. Your kids will have to pick it up.
Your kids or your spouse or partner, someone's going to have to pick it up. We got loads of questions in on the Ask Paul Instagram page. I put a question box up the other day in relation to the first home scheme for people that had questions. We'll just get straight into them. Sure. So the first question, we kind of covered this already, but there's no harm from a Q&A point of view. Is this on new builds only? So let's just bring people through that again, if you don't mind.
Yeah, sure. So the main product that we do, and the reason that it was set up in the first instance was to fund or help fund new builds. So yes, it is predominantly new builds, but we also do 2 other products. Firstly, we do a product for tenants who are renting a property and the landlord has decided to sell that property and the tenant wants to purchase the property they're in. So
which is amazing that you can do it,
yeah. The families living in an area, their kids are in the local school, they're renting a property, they love the area, they want to stay there. So in a scenario like that, they're issued with a notice of termination. It means they might have to vacate and move on. But now with the scheme, they can actually put the funding package together to allow them to buy the property that they've been renting for a number of years.
Brilliant.
And then the third product that we do is self-build. So again, it's more, I suppose, focused for people in the regions, whereby if you have a piece of land or if you're fortunate enough to be gifted land, you can actually build your own home. And again, we can contribute there to the funding costs of building that property.
Excellent. Okay, that's brilliant. So again, I did say the other part of the show where you're wrong that I wasn't aware of the tenancy piece, which I do think is brilliant. Do I need a big deposit for this? It comes in from Charlotte. Do I need a big deposit for this? It's back to the same lending rule of 10%.
Exactly,
which can be to help to buy your own money or
that's why it works really well with the help to buy scheme. And sorry, I should have said it earlier, Paul, maybe perhaps when throw it in there now. So we can provide up to 20% of the value of the property if you're using help to buy. But if you don't qualify, and there are people who don't qualify for help to buy for whatever reason, we can give you up to 30% of the value of the property.
Well, okay.
Now you still do need though to
be able to approval for the other part, yeah,
and to be able to put the 10% deposit, because you can't use our scheme for the deposit.
For the deposit,
but we can give you up to 30% if you don't have the.
So you can get more if you have to fund your own deposit, basically, which is great. Okay, perfect. Okay, this is a really good question actually from Cassie. So I am getting 28%, which is 117,000 euros. she says, from the first home scheme this year. Should I try to pay back ASAP? Afraid of house prices will be going up. So I might take that from a financial planning point of view. I think, Cassie, you're correct. If house prices do go up, the piece you owe back to the first home scheme will increase. So if you can pay it down quicker, they reduce their equity. So I'm right in saying, Michael, just fact check it while you're here opposite me. If I have €100,000 outstanding and it's on a 400,000 property, so it's 20%.
Yeah.
If I pay you back 50,000, your equity falls to 10%.
Exactly.
Yeah. Okay.
Exactly,
Great.
yeah.
Yeah. So, Gazzy, technically yes, but like we said earlier on as well, I always say this from a financial planning point of view, which is why I think financial planning consultations are so important when you're looking at mortgages or buying a property. I'd be looking and saying I might do nothing for the first 5 years, especially when I don't have to pay the management fee, and when I get myself on my feet from a property, because usually it takes 5 years for people to really get their head around the mortgage, especially if you have children, and there's usually loads of things going on the first 5 years anyway, whether it's putting furniture into the property or doing work or whatever you're going to do to the property. So I would say yes if you can, but maybe look at doing a switcher mortgage and getting the equity covered by another bank in the future. And that's probably the best way, I think, which we did go through in the earlier part of the show. So I hope that helps, Cassie. Okay, any indication of the first home scheme price ceiling caps will be increased this year? And that's from Darren. Again, we discussed this. We might as well go through it again.
We review them twice a year. We look at each local authority area, and if the evidence is there to suggest that it needs to be increased, well, we will do that. So our latest ones are we're releasing the 1st of July. So if for the latest price ceilings, go and check on the website. The most up to date and current ones are there, and people think we don't change them that often.
How many counties did you change when we asked Michael last time around? You know, from the 1st of July, was it a few counties, or
we actually changed quite a few because we changed 14 in total.
Wow.
Now, what we did is the reason that was the most we've changed to date, and the reason we did that is because our bottom ceiling was 325, and we found in a lot of local authority areas you just weren't qualifying. So what we've done now, we've raised the minimum from 325 to 350.
Great. Okay, so that happened nearly everywhere. Well, 14.
Yeah, so it was across, 13 of those, and then we also increased Limerick because there was evidence there to say that we were falling behind in Limerick, so we increased Limerick as well. But so we keep a very close eye on it, and we do, and we'll be reviewing them now again before year end, and the next ones will be released on the 1st of January 25.
Okay, brilliant. Okay, how come there is nothing for second-hand homes that aren't vacant for 2 years? It's not there it's supposed to increase supply, so obviously it's new builds. Yeah, and I look at, I suppose, the government's strategy from day one has been to assist first-time buyers get into new properties. They have high energy ratings. They're properties that you're not going to have any problems with leaks or anything like that for quite some time. So I suppose the thing is to direct first-time buyers into new properties. Also, as you correctly said there, one of the objectives of the scheme is to encourage builders and developers to supply and go out and build and deliver new supplies. So that's why. Okay, perfect. And also there is, just to say, other schemes for vacant homes.
Exactly.
So you're not getting knocked out with nearly 70 grand on the other schemes. So you did talk about at the top of the show, in fairness as well. Okay, do you have to pay the management fee in whole, or can the fee be paid monthly? And that's in from C. Tracy. So again, just to say, you don't have to pay for the first 5 years anyway.
Yeah, correct.
So no one's actually paid their fee yet, because the scheme is around 5 years.
It's only 2 years. Yeah. So nobody's paid it yet. But yes, it'll fall due on the beginning of the 6th anniversary. And actually, the way it's structured is it will fall due on a monthly basis. But as I said in the earlier part of the show, if that doesn't suit you to pay at that point in time, you can roll it up, and it doesn't cost you anything extra. There's no additional interest or anything. You can just roll it up and pay it at a time in the future when it suits you.
Okay. Next one is more of a comment on it. I will say I probably disagree with it, but this is from Ashling saying, next to impossible to get houses in Dublin for 475, developers purposely setting prices above. I don't think that's correct, because the developer has less customers if they set it above. Just Dublin's an expensive place to live, and again, the scheme's a nationwide scheme, so it's not there to.
No, and
it's frustrating, but it is what it is.
But it's the same. Like, I can give you examples all over the country where, somebody finds a lovely house, and I understand this. I've been there in a scenario where you find this house, it's a lovely house, and you're thinking, oh God, it's 20-30k above the ceiling, or it's above my budget, and I'd really love to get it, but unfortunately, it's just out of your range. But look, there are properties absolutely available within the price ceiling. So we do a lot of business. In fact, it's our second biggest county. Our local authority area is Fingal. We also do a lot of business in South Dublin, and we do some limited, admittedly, but limited business in Dún Laoghaire, Rathdown, particularly in relation to apartments where the ceiling is 500.
But let's be honest, it's the most expensive part to live in the country. So like that's not the first home scheme's prerogative to try and change that either, or try and get more people in, which is fair enough. Michael, look, that's it for the questions. I just want to say massive thanks for coming in. I remember when you took over, when you came into the scheme, before the scheme was launched, you came in as CEO. There was a lot of negative press. Would you mind bringing, you did say something to me off area, Ron, I hope you don't mind me saying this. Can you give the listeners the example of the woman and actually we had to discuss this actually, who was the fresh starter. So can we actually go through quickly the fresh starter?
Sure.
And the example you gave me, Ron, because I think this brings through the human side. I think in the beginning there's a lot of negativity about the scheme, but from your human side, you're such a nice person, and I know it makes a big impact to you when you see what you're doing and giving 2,000 people an option that they probably wouldn't have had 2 years ago. So congratulations for all the dates. The numbers are amazing. But let's just wrap up with what does a fresh starter mean, and give listeners that story you gave me, Ron, if you don't mind.
Yeah, sure. So as you said at the outset, it's predominantly focused on first-time buyers, but there is a small cohort of people that we actually facilitate there as well, called Fresh Start. So that's basically, and that's common, by the way, across a lot of the government schemes. Just to be fair, that's a government initiative. Same
with the rebuild, or the what's it called, local authority loan.
Local authority for the purchase scheme. Yeah. So basically, Fresh Start is somebody who has been in a relationship, and they don't have to be married, but they've been in a long-term relationship, and our definition of that is that, you know, if they purchase a property together and for whatever reason that relationship breaks down and one of the parties moves out of the home, and obviously they then need to set up and purchase a property for themselves. So they can actually use the first home scheme in that scenario. Now there is one caveat, and that is they must actually relinquish all ownership rights to the original property. So once they do that, they can use the first home scheme to go off then and purchase a new property. And the case you talked about there, I was at an event in I won't say where, but certainly in Ireland, obviously, where this lady came up to us. She was in her mid-50s. She was absolutely frustrated on the basis that she'd been looking for years. She'd been renting, and they'd been moved about, and they'd lost they had to move on a number of occasions, and she just felt at wit's end in terms of trying to get a property. So she gave us her details, gave us in terms of her financial position, and suddenly, well, she realised then, and we said to her, well, you can avail of the first home scheme, and she literally burst out crying in front of us, because she and her 19-year-old son were now going to be able to go off, buy a property, and actually live in that for the rest of their lives, something that they thought they were never going to be able to do again.
And Michael, thanks for sharing that, because that's what, in fairness, this scheme does. And like I said during the show today, I did say I'm not getting political, I'm not supporting any particular party here on this show, but we're just saying that these schemes are out there from a human basis to help people get on. We're not going to solve the property crisis. No. This isn't going to solve it, but it's definitely going to help more people. You've helped 2,000 people get approval. Actually, 5,000 people get approval and 2,000 people draw down, which I think is a big impact. And I really want people to forget about the negativity that's out there in relation to certain government schemes, and just find out, does it work for them? And if so, go for it, get yourself on the property ladder. Because I can tell you, from a financial planning point of view, with the amount of people that we meet that want to retire early, the only way you can retire early or retire comfortably, in my opinion, and I'm sorry if this doesn't sit well with people, is if you don't have a mortgage and if you're not renting. If you have a mortgage, or if you're still renting when you get your 65th birthday or 70th birthday, and if you're going to retire or 60, it's a completely different financial planning path. So I think the very basic of a financial plan is trying to get a property, get it under control, pay it off, typically speaking, and be mortgage free. So I think these products do a phenomenal service. Michael, thanks very much for coming to the show today. It's been a pleasure.
Thank you very much, Paul.